Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Wednesday, the 17th of October, 2007. The market's closed, and that was a pretty wild ride that we saw today. The market initially gapped higher after response to some earnings reports from Intel and Yahoo, but that buying so quickly met some offers as the market rallied up towards that declining 5-day moving average. And that was probably the most important thing I said yesterday, which was when I was talking about the IWM, I said that if the market was to gap up, it's unlikely that it would hold on to the strength because the direction of the 5-day moving average was lower. And that's exactly what we had happening here. So hopefully you didn't get caught chasing that gap open with all the emotion in there. But the market sold off. It broke down through some support levels and broke trend lines, as we'll see in a moment on the Qs. And then it recovered very nicely, though, at the end of the day. So you can't get stuck with one belief about the market. You've got to be able to change your direction quickly when the market evidence dictates that. And here we see for the spiders, this is the VWAP, today's volume weighted average price, and you can see it spent most of the day below it right up until late in the day. The market did recapture that, and it also recaptured the 20-day moving average here on the daily time frame. So once again, it shows that we always give the benefit of the doubt to the trend of the longer term time frame. And with this market close to all-time highs, we want to give the benefit of the doubt to the buyers and just be on alert while we are seeing these trends giving us mixed messages. We still have this pattern of lower highs and lower lows, but it is very good to see that it broke down, I think, through a level that a lot of people were watching near that 153.50. And what I had mentioned yesterday was 153 to 153.25. If we take a look at that Fibonacci from the recent lows here from late September to the highs just this month, that the 2/3 retracement came down at about 153. That's also where we had this prior level of resistance back in here in late September that the market broke higher from. And that's where we saw this rally developing. But now we're back up above this range, so I think that going forward this is going to continue to be important. The market looks like what it ought to do next is just kind of find a little bit of support in here, maybe build a shoulder even, and we can start to think that the longer term time frame will continue back up again because the path of least resistance is higher, and the trend once established on the longer term time frame takes a lot more energy to reverse obviously than it does on the shorter term time frame. So let's take a look at the semiconductors. We'll take a look again at the SOX because the SMH chart is all screwed up. Yesterday I mentioned that 495 looked like a level of potential resistance, as that's where the declining 50-day moving average is. The market made it right up to that level, so it's stuck kind of in the middle of a range, that range being 510 to about 480 or so, about 480, let's call it 480 to 510. And it's kind of just in the middle of that range right now. Intel obviously reported earnings. There was a favorable response to that, and that stock is looking pretty bullish in here. Not my type of stock that I like to trade, but the stock does look good on these longer term charts. So Intel probably leading the way in that semiconductor index. The IWM also broke down through its 20-day moving average. Well, it did yesterday, but it broke down through that today after the failed gap higher. Kind of flushed some people out, made it all the way down towards about 81 or so, and the market recovered very nicely. What's important here is not what happened early on, but the recovery is more important. You can see that this market also was pushed back up above that 82 level that we had been watching as support. It did break down after that gap failed, so that failed gap should have kept you on the defensive early on, and then perhaps if you're very aggressive, maybe you got long later on in the day. But I think what happens in here when we have these fast shakeouts like this that often lead to these failed shakeouts, these failed and fast shakeouts, they often lead to a fast move in the opposite direction, as what happens is the weak long holders get out of here. And I call them weak long holders because they should have been out, back in here when there was further, with the first signs of evidence that the market was declining. Defense wins the game, and you got to be early with those exits. But those weak longs get out, new shorts get sucked in, it removes the supply from the market, and then when it rallies back up, all those shorts scramble to cover. The long holders that threw their stock away might chase stock prices higher again, so it creates artificial demand, and there's no one left to sell to them, because the stronger holders realize that the weak holders are out of the market, and now they're going to demand a premium for for the stocks that they own, and for the fact that they took a higher risk by holding it during that decline. We do still have the declining 5-day moving average though, and 83.25 is probably the most important near-term resistance that this market has to get above before we can really start to see some strength. But again, the market showed good signs late in the day. The NASDAQ 100, I had put on my blog that we wanted to be careful around this area, as it looked like there was a potential for a larger breakdown after this widely watched trend line. And we had the same thing here, a failed gap early on. The market came down, and the thing here is that a lot of times that these markets break down, again, only to suck in the weaker shorts and to get rid of the longs who are kind of iffy in here. But this market, the NASDAQ that is, continues to show the most relative strength. It was up 1.3%, closed right up near those highs after that big shakeout, and that only further strengthened this market. We've got a little bit of resistance, about 53.70 or so, but this NASDAQ 100 continues to hold up above the rising 10, 20, and 50-day moving averages, so it continues to act good. We are in the early part of middle earnings season, so there's going to be a lot of shocks to the market, and it's going to be very company specific, so just be aware again of when the companies you trade are due to report earnings.